The Peach State is experiencing a housing market meltdown that's sending shockwaves through communities across Georgia in 2026. From Atlanta's sprawling suburbs to the once booming cities of Augusta and Columbus, a real estate crisis is unfolding that's erasing years of equity gains, trapping homeowners in underwater mortgages, fundamentally reshaping the state's housing landscape. In some Georgia cities, median home prices have plummeted by as much as 32% in less than 2 years. Properties that commanded $475,000 at the peak are now struggling to sell for $325,000. Days on market have exploded from an average of 28 days in early 2024 to over 135 days in 2026. Inventory levels have surged by 340% in some metro areas, creating a massive oversupply that continues driving prices downward, with no bottom in sight. The numbers tell a devastating story. Across Georgia's major metropolitan areas, over 47,000 homes currently sit on the market compared to just 12,000 2 years ago. Foreclosure filings have spiked by 89% year over year. An estimated 26% of Georgia homeowners who purchased in 2021 and 2022 now owe more on their mortgages than their homes are worth. This isn't just a correction, it's a collapse. Behind every percentage point decline are real Georgia families watching their life savings evaporate. Real estate agents struggling to close deals in a frozen market. Entire neighborhoods dotted with "for sale" signs that sit for months with no offers. Communities grappling with declining property tax revenues and deteriorating services. What triggered this dramatic reversal in one of America's fastest-growing states? Which specific factors are driving Georgia's housing market off a cliff? And most importantly, how much worse will it get before prices finally stabilize? Today, we're exposing the truth about Georgia's housing market collapse. The reality is more severe than mainstream media is reporting. Let's dive into the data. Georgia's housing market collapse isn't happening in isolation. It's the result of multiple devastating forces converging simultaneously. The interest rate catastrophe. The Federal Reserve's aggressive rate hikes have been absolutely brutal for Georgia. Mortgage rates that bottomed at 2.7% in early 2021 have stabilized between 7% and 8% throughout 2025 and into 2026. For Georgia homebuyers, this translates to doubled monthly payments. A $400,000 home that cost $1,398 per month at 3% now costs $1,300 per month at 7.5%. This affordability crisis has removed hundreds of thousands of potential buyers from the market entirely. The speculation exodus Georgia became a hotbed for real estate speculation during the pandemic boom. Institutional investors and individual flippers flooded Atlanta and surrounding markets, accounting for nearly 35% of all home purchases in 2021 to 2022 too. Companies like Invitation Homes and countless smaller investors purchased entire neighborhoods, driving prices to unsustainable levels. When returns diminished and prices began falling, these investors rushed to exit simultaneously, flooding the market with inventory and accelerating the crash. The migration reversal between 2020 and 2023, Georgia attracted over 270,000 new residents. Remote workers fleeing high-tax states, retirees seeking affordability, and families chasing the Southern lifestyle. But in 2024 and 2025, the trend completely reversed. Return-to-office mandates forced remote workers back to traditional job markets. Rising property taxes and insurance costs eroded Georgia's affordability advantage. The population inflow that drove the boom has become an outflow, accelerating the bust. The overbuilding disaster builders delivered over 95,000 new housing units across the state between 2022 and 2025, with Metro Atlanta alone receiving 68,000 new homes. This construction frenzy continued long after demand had peaked, creating massive oversupply. Entire subdivisions of brand new homes now sit partially empty, with desperate builders slashing prices and offering unprecedented incentives. This new construction glut is crushing resale home values as buyers choose discounted new builds over existing properties. The property tax burden. As Georgia home values soared during the boom, property tax assessments followed. Many Georgia homeowners now face annual property tax bills that have doubled or tripled from pre-pandemic levels, often exceeding $6,000 to $12,000 in high-value suburban areas. Combined with elevated mortgage payments and skyrocketing homeowners insurance premiums, up 40 to 60% in many areas, these costs have made homeownership financially unsustainable for middle-class families. Metro Atlanta suburbs, the epicenter of collapse. Gwinnett County, Ground Zero. Gwinnett County, Metro Atlanta's northeastern powerhouse, is experiencing one of Georgia's most severe housing crashes. Median home prices have plummeted from $355,000 at peak to $335,000 currently, a catastrophic 31% decline. Cities like Beaufort, Suwanee, and Lawrenceville are seeing active inventory levels that have increased by 420% since 2022. Properties sit on the market for an average of 142 days, with most requiring multiple price reductions before attracting any serious interest. The investor concentration in Gwinnett was particularly extreme during the boom. Nearly 42% of purchases in 2021 to 22 were investor-owned. These speculators are now in full panic mode, flooding the market with desperate listings and accepting offers far below purchase prices. New construction developments that were supposed to be Gwinnett's future now sit partially empty, with builders offering $60,000 discounts, free upgrades, and mortgage rate buydowns. An estimated 29% of recent buyers are underwater on their mortgages. The rental market has collapsed, with vacancy rates climbing above 11% and rents down 17% from peak levels. Schools are seeing declining enrollment. The county that symbolized Atlanta's suburban growth is now a cautionary tale of speculation gone horribly wrong. Forsyth County, luxury market implosion. Forsyth County, luxury market implosion. Forsyth County, Metro Atlanta's affluent northern suburb, has experienced a luxury housing market collapse that shocked even seasoned real estate professionals. Median prices have crashed from $625,000 at peak to $425,000, currently a 32% decline. Homes priced above $700,000 have seen declines exceeding 40%, with some luxury properties down 45% or more. Cities like Cumming and Alpharetta's northern reaches marketed themselves as premium destinations for relocating executives. When mortgage rates exceeded 7%, the luxury segment froze completely. The monthly payment on a $750,000 home at 7.5% is approximately $6,300, far beyond what most families can afford, even with high incomes. Active inventory in Forsyth has exploded to over 1,450 homes. Properties priced above $600,000 average 196 days on market, with many luxury homes sitting unsold for over a year despite desperate price reductions. Homeowners who purchased at the peak face losses often exceeding $250,000. Henry County, working class devastation. Henry County, working class devastation. Henry County, south of Atlanta, represents the working class side of Georgia's housing crash. Median prices have fallen from $385,000 at peak to $265,000, currently a 31% drop that's absolutely crushing for families who stretched their budgets to buy during the boom. Cities like McDonough and Stockbridge are seeing inventory levels that represent over 10 months of supply. Henry County was marketed as an affordable option for families priced out of closer-in Atlanta suburbs, but the 35 to 45-mile commutes to Atlanta job centers have become unsustainable as gas prices remain elevated and return-to-office mandates increase. When Atlanta's job market softened, Henry was left with massive oversupply and vanishing demand. Homeowners who purchased in 2021 to 2022 typically owe $120,000 to $160,000 more than their home's current values. Many face monthly housing costs exceeding $3,400 for homes now worth dramatically less. Foreclosure filings have spiked by 118% compared to 2023. Entire subdivisions show visible signs of distress: unmowed lawns, abandoned properties, and streets lined with for sale signs. Beyond Atlanta, the regional collapse. Augusta, second-tier city crisis. Augusta, Georgia's second-largest metro area, has experienced a 28% median price decline from $325,000 to $234,000. This mid-sized market lacks the economic diversity to weather downturns. Active inventory has tripled since 2022. Properties sit for an average of 28 days. The investor concentration was significant during the boom, and the liquidation has been brutal. Columbus border market breakdown. Columbus, on the Alabama border, has seen prices crash 27% from $295,000 to $215,000 to $215,000. This military town has been hit by reduced defense spending and base consolidation rumors. Inventory has surged by 310%. Days on market average 135 days. Many properties received zero offers despite significant price reductions. Warner Robins military market meltdown. Warner Robins, home to Robins Air Force Base, has experienced a shocking 29% price collapse from $315,000 to $224,000 to $224,000. Despite the military presence, the civilian contractor workforce has been reduced significantly. The housing market has been devastated, with inventory representing over 11 months of supply. Many homeowners who purchased expecting stable military demand now face severe negative equity. Savannah tourist town trouble. Savannah has seen prices drop 26% from $425,000 to $315,000. The tourism-dependent economy has struggled with changing travel patterns. Remote workers who relocated during the pandemic for Savannah's charm have largely departed. Inventory has exploded, particularly in outlying developments. Days on market exceed 140 days in many neighborhoods. Homeowner financial destruction. Hundreds of thousands of Georgia families who made what they believed were safe, conservative home purchases are now trapped in financial nightmares. Those who bought in 2021-2022 with minimal down payments are almost universally underwater. Many owe $100,000 to $200,000 more than their homes are worth, effectively imprisoning them in properties they can't afford to sell. The psychological impact is profound. Homeowners are experiencing severe stress, relationship strain, and depression as they watch their largest investment evaporate. The American dream of building wealth through homeownership has become a nightmare of debt and declining values. The rental market catastrophe. Small investors who purchased rental properties during the boom face particularly dire circumstances. Rental vacancy rates have exploded across Georgia, exceeding 12% in many markets. Rents have declined by 15 to 20% from peak levels, making cash flow positive investing nearly impossible. Many landlords now face monthly losses of $520 per property, bleeding cash month after month, with no viable exit strategy. The investor liquidation is accelerating the housing crash. Desperate to stop the financial bleeding, landlords are accepting offers that result in six-figure losses. This flood of distressed sales is driving comparable values even lower, creating a vicious downward spiral. Community-level deterioration. The housing crash is affecting entire Georgia communities in visible ways. Property tax revenues are declining as assessed values drop, forcing counties and cities to make difficult budget decisions. Schools are experiencing enrollment declines as families relocate. Infrastructure maintenance is being deferred due to budget constraints. Local businesses that depend on homeowner spending, home improvement stores, furniture retailers, restaurants, and service providers are reporting significant revenue declines. The construction industry has contracted sharply, with tens of thousands of workers laid off as new projects halt. The foreclosure wave, while still manageable, is growing. Filings are up 89% year-over-year and continue accelerating. If unemployment rises or economic conditions deteriorate further, Georgia could see foreclosure levels that overwhelm the market's ability to absorb distressed properties. The bottom isn't here yet. Despite the severe price declines already experienced, most housing market analysts believe Georgia hasn't reached bottom. Inventory continues building as more desperate sellers list properties and builders deliver remaining pipeline projects. The absorption rate remains painfully slow, meaning months of additional downward price pressure lie ahead. Most forecasts suggest Georgia won't see price stabilization until late 2026 or early 2027 at the earliest. Interest rates are unlikely to decline significantly in the near term. The Federal Reserve has indicated caution about cutting rates too aggressively, meaning the 7-8% mortgage rate environment will persist. This keeps affordability constrained and buyer demand suppressed. The recovery timeline. Once Georgia's housing market finally stabilizes, recovery will be gradual and uneven. Prime Atlanta neighborhoods with strong economic fundamentals may begin recovering by 2027 to 2028. Desirable school districts, walkable areas, and neighborhoods with character will likely stabilize first. Suburban areas that were overbuilt will face extended recovery periods. Cities like those in Henry County, Outer Gwinnett County, and distant exurban developments may not see meaningful appreciation until 2029 to 2031. Some areas may require a full decade to return to peak prices if they ever do. Luxury segments will likely lag the longest. High-end markets are extremely sensitive to economic conditions and interest rates. Full recovery in places like Forsyth County may not occur until 2030 or beyond. Don't expect significant government intervention to stop Georgia's housing crash. The state government adheres to free market principles and is unlikely to implement large-scale homeowner bailouts or price support programs. The market will correct through time and price adjustment, a painful process, but ultimately the only path to sustainable housing prices supported by Georgia incomes and economic fundamentals. For current homeowners, if you're a Georgia homeowner watching your equity evaporate, your strategy depends on your specific situation. If you can afford your payments, stay put. Don't panic. Sell into a declining market. View your home as shelter and community rather than as an investment. Focus on the long term. Home values will eventually recover, even if it takes 5 to 8 years. Maintain your property well to preserve value. If you're struggling financially, explore all options before defaulting. Contact your lender about loan modification programs. Consider renting out rooms to generate additional income. Evaluate whether a short sale might be preferable to foreclosure. If you absolutely must exit, consult with a HUD-approved housing counselor before making irreversible decisions. If you're severely underwater but stable, this is the hardest situation. Many financial advisors suggest staying and treating the situation as a very expensive lesson. Walking away destroys your credit for years and may result in deficiency judgments depending on Georgia law. For potential buyers, Georgia's housing crash is creating opportunities, but approach with extreme caution. Only buy if you plan to hold 7 to 10 years minimum. Don't expect quick appreciation. The days of rapid equity gains are gone for the foreseeable future. Focus on established neighborhoods with proven resale history, quality schools, and reasonable commutes to employment centers. Avoid the temptation of deeply discounted new construction in remote locations. Ensure you can comfortably afford all costs: mortgage, property taxes, insurance, maintenance, and HOA fees. Don't stretch your budget hoping for appreciation to bail you out. Get a thorough inspection and be wary of investor-owned properties that may have deferred maintenance. Negotiate aggressively. In this market, sellers are desperate. Request closing cost assistance, repairs, price reductions, and extended due diligence periods. Georgia's housing market collapse is real, it's severe, and it's far from over. From metro Atlanta's suburban sprawl to regional cities across the state, home prices are crashing at rates not seen since the 2008 financial crisis. Median prices down 26 to 32% in major markets. Inventory up 300 to 420%. Days on market exceeding 140 days. Foreclosure spiking 89%. Hundreds of thousands of homeowners underwater. The causes are clear: reckless speculation, massive overbuilding, interest rate catastrophe, migration reversal, and economic vulnerability. Georgia became a speculative playground during the pandemic, with prices driven to levels completely disconnected from state incomes and economic fundamentals. Now the correction is brutal and unforgiving. The bottom hasn't arrived yet. Further price declines are likely through late 2026, before stabilization begins. Recovery will be gradual, uneven, and extended, with full recovery to peak prices potentially requiring until 2030 or beyond in many areas. For Georgia homeowners, the path forward requires difficult choices, financial resilience, and realistic expectations. Focus on long-term horizons. Maintain your properties. Avoid panic decisions. This crisis, like all housing cycles to profits, will eventually end. For potential buyers, opportunities exist but require careful analysis and cautious execution. Don't rush. Don't overpay. Don't overextend financially. Buy for lifestyle and long-term holding, not for quick profits. If you found this analysis valuable, subscribe to our channel and hit the notification bell for updates as Georgia's housing crisis continues unfolding. Leave a comment sharing your experience. Your perspective helps our community navigate this crisis together. Stay informed, stay cautious, and remember, this too shall pass.